Welcome back to Intelligent Investment Today, the podcast concerned with all things value investing. In each episode, we explore a different topic from the world of investment and attempt to apply the timeless lessons as laid down by the man widely regarded as the father of the craft, tutor and mentor to the legendary Warren Buffett. We're of course talking about Benjamin Graham. In today's episode, we should be taking a rather different tack to usual. We'll be peering into one of the more curious corners of the investing world. The persistent allure of the charlatan, the soothsayer, and the supposed shortcut to financial success. Specifically, we shall examine how astrology, mysticism, and other get-rich-quick schemes have found their way into the minds and methods of investors across the decades. We'll consider why time and again the unwary are caught out by the promise of easy money, and why even for the disciplined value investor, human nature renders us not entirely immune to temptation. So without further ado, let's dive right on in. As ever, strap in, sit back, and get ready to absorb another lesson in the art and philosophy of value investing, as inspired by Benjamin Graham. The name Evangeline Adams is unlikely to ring many bells for modern investors. Yet in the early 20th century, she was something of a Wall Street celebrity. Her specialist skill, astrology. In an era long before algorithmic trading, financial models, or even the Securities and Exchange Commission, Miss Adams managed to carve out a reputation as one of the most sought-after advisors in New York City. Her claim that the position of the stars could reveal the future direction of the stock market. It sounds quite absurd to the modern ear, but her success was very real. So renowned was her apparent gift for market prophecy, that her clientele included some of the wealthiest and most influential figures of her day. Names such as J.P. Morgan, John Paul Getty Sr., and even Wallace Simpson were said to have frequented her plush consulting rooms on Madison Avenue. For those unable to visit in person, no problem. They could subscribe to her newsletter, which promised celestial insights delivered straight to their door. A 30-minute session with Miss Adams cost $50, the equivalent of around $1,000 today. Perhaps proving Warren Buffett's famous adage that Wall Street is the only place where people ride to in a Rolls Royce to get advice from those who take the subway. Despite her reputation and her star-studded client list, Evangeline Adams had no financial training, no background in economics, and as far as anyone can tell, little interest in balance sheets or business fundamentals. Her guidance was based entirely on the movements of the planets and the alignment of the zodiac. To her critics, and there were many, it was an obvious charade. Yet the remarkable thing was that, for a time, her predictions seemed to work. She repeatedly forecast rising markets, and indeed, through much of the 1920s, the market did rise. For nearly a decade, the United States experienced unprecedented economic expansion, a speculative boom that seemed to confirm her otherworldly foresight. But as history so often reminds us, all bubbles must burst. In October 1929, just weeks before the Great Wall Street crash, Miss Adams confidently declared that stocks might climb to heaven. It was, one might say, an ill-timed prophecy. When the crash came, catastrophic and unrelenting, many fortunes were obliterated overnight. The astrologer's followers might have been expected to abandon her in droves. Yet astonishingly, her business continued to flourish until her death in 1932. Even after her most spectacular misfire, the faithful still flocked to her. It is tempting to laugh at such gullibility, to dismiss it as a relic of a more credulous age. But the truth is that the story of Evangeline Adams tells us something far more enduring about human behaviour. Our willingness, however sophisticated we might believe ourselves to believe in shortcuts. Fast forward to the 21st century. We may scoff at the notion of market astrology, yet its modern equivalents are all around us. The mediums have changed, from crystal balls to online dashboards, from seance rooms to YouTube channels. But the underlying psychology remains the same. Every era produces its own breed of financial soothsayers. They come bearing newsletters, trading signals, or subscription courses. Some promise riches through cryptocurrency, insider tips. Others claim secret algorithms that can forecast the next stock market surge. Unlike Miss Adams before them, They are rarely short of followers. The logic behind their appeal is seductive. Why toil away studying balance sheets when someone else has already cracked the code? Why endure years of discipline and patience when a monthly subscription can supposedly deliver instant financial enlightenment? The answer, of course, lies in the reality that Benjamin Graham warned us of many decades ago. In his words, there are no sure or easy paths to riches on Wall Street or anywhere else. But that truth is far less appealing than the glittering illusion of effortless success. Consider the modern-day financial influencer, a figure who, rather like Miss Adams, often derives income not from the markets themselves, but from those who dream of mastering them. Their wealth is built on subscriptions, courses and ad revenue, rather than consistent investing results. If they truly possess the ability to foresee market movements, one might reasonably ask, why spend time peddling predictions when compounding their own capital would suffice? And yet their audiences are enormous. It's estimated that over 50% of new retail investors in the United States consume financial advice primarily from social media. The technology has changed, but the psychology has not. The same impatience, the same longing for shortcuts, continues to drive the cycle. So what lies at the root of this phenomenon? At its heart is human impatience. The markets test not merely intellect, but temperament. Most people, if we're honest, do not wish to be told that success takes years of study, countless mistakes, and a calm endurance through market storms. It is far more comforting to believe that riches lie just one clever trick away. Graham understood this deeply. He taught us that investing is most dangerous not when the markets are wild, but when our minds are. The urge to act, to do something, anything, can be overpowering. We are wired to equate motion with progress. And so, in the absence of discipline, the mind seeks out shortcuts. The magic formula, the secret pattern, the hot tip. And it's not only the naive who fall prey to this. Even seasoned investors can succumb to the illusion of knowledge, believing that with just the right data set or analytic tool, uncertainty can be conquered. But as history has repeatedly shown, the future remains stubbornly unknowable. Take, for example, the quantitative revolution of the late 1990s. Hedge funds armed with powerful computers and complex models promised to turn market prediction into a science, and many succeeded for a while. Yet even these models, built on oceans of data and brilliant mathematics, eventually collided with reality. In 1998, long-term capital management, run by Nobel Prize-winning economists, imploded spectacularly, nearly bringing the global financial system down with it. Something that we've examined in detail on this podcast in a previous edition. But if even Nobel laureates could not consistently foresee the future, what hope has the modern-day influencer on TikTok? So where exactly does this leave the value investor? The very essence of value investing, the careful study of a company's intrinsic worth, the insistence on a margin of safety, the patience to wait for the market to recognise value, is in itself an act of rebellion against the culture of shortcuts. Ours is not a discipline for those in search of excitement. It offers no promise of overnight success, no celestial guidance from the stars. What it offers instead is rationality. It asks that we ground our decisions in evidence rather than emotion, in analysis rather than astrology. To be a value investor is to accept that uncertainty is part of the game, that success comes not from knowing the future, but from preparing intelligently for it. It is to recognise that our greatest enemy is often not the market, but ourselves. Our own impulses, our own overconfidence, our own impatience. Benjamin Graham's greatest contribution was not merely his analytical frameworks, but his temperament. He taught us that the intelligent investor is not one who never errs, but one who is equipped, emotionally and intellectually, to survive their errors and to learn from them. As he wrote in The Intelligent Investor, the essence of investment management is the management of risks, not the management of returns. And nowhere is that risk greater than in our willingness to be deceived by the promise of something for nothing. The tale of Evangeline Adams, and the many who have followed in her footsteps, is therefore not just a curiosity from financial history. It is a mirror, a reflection of our own recurring weakness. The forms of charlatanry may evolve with technology, but the substance remains unchanged. The same hunger for shortcuts, the same impatience, the same triumph of hope over reason. Perhaps the best way to illustrate this is with a small thought experiment. Imagine two investors starting out today. One spends their evenings reading annual reports, learning accounting, and cultivating patience. The other spends theirs watching videos promising guaranteed returns and AI trading systems. A decade from now, one will almost certainly have achieved steady, compounding success. The other a long trail of disappointment and fees. The difference between them is not intelligence, it is temperament. And that, as Graham and Buffett have reminded us time and time again, is what separates the intelligent investor from the speculator. So what moral can we draw? Perhaps this. The surest and fastest way to become a millionaire is to start out as a billionaire and seek the financial advice of an astrologer. In all seriousness, the lesson is clear. Resist the temptation of easy answers. Shun the siren songs of certainty. Remember that in investing, as in life, lasting success comes only from discipline, humility, and hard work. The intelligent investor's path is neither mystical nor magical. It is grounded in reality, in numbers, in patience, and in the unglamorous habit of thinking for oneself. The rewards may come slowly, but when they do, they endure. And on that note, we shall draw today's episode to a close. I do hope you've enjoyed this exploration of charlatans and shortcuts, and that it has reinforced your commitment to the timeless principles of value investing. If you found today's discussion enlightening, please do consider subscribing or adding us to your playlist. And, as always, spread the word so that we can continue to grow this community of thoughtful, disciplined investors. I'm David Coombs. This has been Intelligent Investment Today. Until next time, stay safe and happy investing.